Hey, good afternoon, guys. Hey, James. Hey, Matthew. And for the sake of everyone who's going to be strolling through the doors over the course of the next 10 minutes, hello to you as well. It's been a rocky road today in the markets. It certainly has. The USD CAD, the highlight of this week, on screen for you at the moment. Fantastic move today. Didn't even retest the liquidity, went straight to TP. Ended up as a 1 to 3.84 in the bag. So really, really nice result from the USD CAD. However, and it's a big however, I'm afraid, Euro yen, pound yen, and Aussie yen have all decided to dump. So almost the entire gains from the UC has gone to the cost of these three yen assets. Real unfortunate business, guys. And it really goes to the point of the week, the theme of the trading week this week. That is just continue to be a grind from beginning to what seems like the end. Obviously, the end for me is I won't be doing any market orders tomorrow, and most of my pending orders I've been working on clearing down today from the fund so that they don't need any management whilst I'm away. But that being said, it really has been rocky, hasn't it? I just had a private tuition session with a member in here who has also been doing very well week on week and showing pure consistency, doing really, really well, but has really struggled this week. Things just reversing, fake outs left, right, and center, indecision in the markets. It's been a real rocky road, and I think we're all feeling it. So with the Aussie yen that had the lovely breaker structure, rallied to about 47% of the position of the target profit, then straight to stop. We had the euro yen, which broke structure for that move to the downside and then came straight the way back up and then straight the way back down and now straight the way back up. Hey, good afternoon, Braden. I was just thinking of you earlier today. Just wondering how you're doing. I haven't seen you for a couple of days. Hope all well with you, mate. But yeah, the euro yen. And then, of course, that GJ as well. Going down, making this low, 50% of the target done, and then bang, straight to stop. It just really does carry that theme home, And we've done 11, 12, 13, 14 losses. 14 losses this week. And now with the USD CAD hitting its target, 6 wins. I've yet to tally it up in my head. I'll check the track record in a bit when the trades pass through to the track to see exactly what we've done. But from my perspective, from my perception of things, I believe the fund is about 0.37, 0.34% up for the week so far. And that's out of 14, that's out of 20 trades. 20 trades for 0.34. So it's been a real rocky road. It's been hard going. Definitely. But I think, and Matthew said, I said it earlier and Matthew seconded it, it really does go to show the magic of good risk management. It's what really separates the retail traders from the professional traders. It seriously is. It's black and white. Because with the risk management and the way that we have the setup, we have incurred so many losses, but we have been able to weather the storm. And had every single one of those trades been taken, you would still be currently up, regardless of the fact that we had incurred 14 losses over the course of the week's trading. I think the month so far sits at about 6% up or something like that. So, yeah, I mean it's it's good. It's good to see from that perspective, but at the same time, it's been hard work. It's been frustrating. Lots of things moving, lots of things triggering, but just not making it the full way there to the targets. Yeah, not bad, thanks, Braden. Yeah, not too bad, thanks, buddy. Had a really good weekend. Last weekend did a bit of adventuring, which was good. Obviously you've just heard what I've been going on about here in the markets. The price action this week been a bit of a grind. I don't know about you guys. You know, I don't want to speak on behalf of you. If you've been having a good week, then great. But yeah, I think it's been hard work. It's been hard work for me, definitely. Yeah, yeah. I would definitely second that. So we've got about 4 minutes to go until the CPI. Let's just have a real quick flash over. I want to set some things up for us. Couple of intraday things. So based on CPI numbers being bullish dollar, bearish gold, I would like to see a break of structure underneath this level and a push into liquidity. We are going to be doing some sketchy trading here, guys, just for the sake of the news event. So I will be looking at placing in a short order. Remember, the short entries on these trades need to be mega aggressive because of slippage. We need to account for that. So I'm going to be looking at maybe a 1 to 2.65 for a short there in gold to the downside. Not really looking for any longs at the moment in gold, unfortunately. We do have a margin to trade the other side of the market about there. But I just don't like the long, so I am only going to be incurring the short there. So that's going to be locked into the market now. We do have to move quite quickly here, guys, because we only got a few minutes to go. So short order gold, target 2610.93. Sorry, target is 2604, isn't it? 2604.79. Entry 2610.93. Stop 2613.25. Right. Next thing I want to do is go down to our stock markets. The NAS 100 has been holding its gains at the moment. We are potentially looking at a break of structure underneath this area. It doesn't really make sense to the left of the move, but that is the break of structure that I'm going to be going for. Target profit for this one is going to be at this area in here, and that's the only thing that I want to be capturing here today. I'm not looking for anything more. So entry, target, and stop loss, nice margin above there, looking at a 1 to 2.65. Okay, so I can't read the numbers out on the NAS 100, guys, because most of the time our indice tickers are different. Just look at the most recent low, this high and this low, and that's your trading margin. You can see the numbers on the screen if you need them to assist, but I'd say probably not. 20, 170, 26. Yeah, okay. Right, so that's that. In terms of the long for the NAS 100, again, unfortunately, team, we're kind of finding through risk profiling our setups here that we're locking ourselves into only one bias. Yeah, I don't like it, but it's what's taking place. I think the Dow Jones could be our one long today. Yeah, I think that's going to be it. And we got 40 seconds to go, team. All right, let's get this locked and loaded. Pending order. Breaker structure in element is in there. Right, we got to go. We got to go. Entry 42.53823. Stop loss 42.50. Target profit 42.6377. Actually, I'm going to call that 637 flat. That's going to be our one long. All right, we've got 10 seconds to go here, guys. The result's going to come out before for me because of the stream delay, okay? Not by much, though, so I'll hop over. Right, let's go. Let's see what we got. Inflation rate, monthly, core inflation, monthly and annual, and base, monthly and annual. Wow, okay, this is bullish dollar, guys. This is bullish dollar. Core inflation rate. Inflation numbers have risen. So, or not risen, but from the forecast. So prior figure for the core inflation rate monthly is 0.3. We're actually remained at 0.3, which is a forecast was 0.2. The core inflation annual data was 3.2. Forecast was 3.2. We've actually risen in core inflation annual data to 3.3. Inflation base rate is 0.2. That was from the prior figure. That's the current figure. The forecast was 0.1. And we've actually had annual base rate down by 0.1%. That one is an outlier to the rest of the data, unfortunately, that could stir things up a little bit. That really could. Because of the fact that base rate and the annual one in particular is probably the highlight figure of the bunch, the one that is most highly regarded out of them all, and the fact that it is dipped down a little bit does lend itself to, I fear, going back to the charts, because I imagine there's going to be one hell of a volatility strike. But let's go and have a look what's happened. So generally speaking, this is actually quite sticky data. I said at the beginning of the week that I expected there to be some sticky data, that we were looking at that data being on par or possibly a beat on the forecast. Apart from that base rate annual data, that is the case here, but we have seen that downtick. So let's go check it out. Let's see what's going on. That's going to be a blowout. Yeah, I guarantee it. That's a blowout. What about gold? Gold is done. Let me check my broker quickly. 2609.87. So I got, because of with slippage, I got a 1 to 1.5. So that's great. Thank you very much. A 1 to 1.5 on the cusp of what I deem acceptable. This is literally riding on the edge. That's gone. Yeah, this is gonna be a loss. Not the Dow Jones, but the NAS 100. That's gone. That is gone. Is that still running? Oh, that is still running. It's still holding on, guys. It's still holding on. Some way, somehow. I do genuinely think this is going to be a blowout, though. So I'm not going to hold my breath. I tell you what, that gold long would have been nice as well. We could have got double the trade for one, couldn't we? 2 for the price of 1 on gold. And that break of structure element there was the right one to go for as well. It's all good hindsight trading though. I didn't really like it because of the fact there were so many TRFs, but it did snap through them. Piece of cake, didn't it? Like a hot butter through knife. Like hot butter through a knife? My God, the excitement's too much for me. Like a hot knife through butter. Yeah, that's not bad. That's not bad. Dow Jones remaining really stable here. That's unusual, I have to say. That's quite unusual what the Dow Jones is doing at the moment. My God, this is still holding on. What is going on? This is what I'm saying. This is what I'm saying about though, guys. Okay, with this economic data. Okay, 3 of the major 4 inflationary metrics, all showing inflation is very sticky, and just the one at a downtick. And because of that one versus the other 3, this is kind of price action that we're getting upon the initial breakout. Now, obviously, the market's still got to digest this data. We still need to give it a while to get in the flow. But we're not really seeing the enormity of the breakout that we would otherwise see. In a general sense. We've still got that long in there. That's from earlier, that is. I'm not entirely sure about that. Team, sorry, can you please, if you do have it in, if you don't, that's obviously absolutely fine. But I would remove that pending order. Okay, remove that pending order from the order books. We don't want that anymore. Regardless of the fact if gold travels to 26.36, it's besides the point. That's That's not a good one. So I'm going to remove that. And that's going. Yeah. Okay. Right, let's have a look at our DXY. DXY's got a pretty big volatility strike going on at the moment. A lot of indecision up here. Doesn't really know which way to go. It's currently not really broken any major levels with clarity. We've got a break, but it's not really holding, is it? Come on. Yeah, it's not really holding. Not too well. Yeah, so that's fine. Oh, God, obviously. Oh, I don't know. Euro yen. Didn't do anything on that one. Where's that GJ? Oh, yeah, there we go. There it is. There it is. I don't know. What are you going to do, eh? What are you going to do? That's alright. I think at this stage we'll be looking ahead to next week. Okay, so God, I can't believe. Oh my God, still in. This is still going. Come on, NAS 100. You're my recovery slot for this week. Let's go. What are we looking at the Dow? Yeah, I don't know. Yeah, it's very shaky stuff. Very, very shaky stuff at the moment. All right, guys. Well, that was pretty much the CPI event in all of its glory. To be fair, probably one of the largest non-impact events that we've had regarding the CPI inflation metrics for a long time. For a really long time. Generally speaking, that CPI, we really see some explosive price action, and I don't think that's necessarily been the case today. I think it just continues that theme that we've been seeing all week, really, doesn't it? I'll have to wait for the market breakout this afternoon. I imagine when our US counterparts get on board, we'll probably see quite a nice breakout. And so it's our jobs now to simply refine our analysis and find out where those breakout criteria are going to be. So let's go back up to the 15 here. Let's take our time. I'm going to remove the pending order from the Dow team, okay? Remove that from the Dow if you have it in. From the Dow. Yeah, okay. Alrighty, so let's remove this then. Let's have a look at where we are. So let's check out the daily first of all. So the daily time frame at the moment, right up there at the all-time high area. Not obviously on top of it, but very close. This is our all-time high. This is where we're trading at the moment. The current all-time high area, I think I probably safely have it there for a daily level, which doesn't really give us too much of a trading margin to it from where we are at the moment. It's not the worst, but it's certainly far from the best as well. We've got this area in here, which is quite a nice balanced breaker structure. Got the retest going on at the moment. And so now we've got a pretty decent margin. Let's have a look on the 15, see what that actually looks like. Yeah, that's not too bad, is it? That's not too bad at all. Okay, so how long we got left? What's the time? Okay, 20 to 2. So we're going to have to be a bit vigilant here. The breaker structure area would be about there. We've pushed into liquidity right now. That's good to see. Oh my God, wait. Oh my God. It's landed. It's landed. Let's go. Let's go. If I had the sound effects turned on, I would definitely be hitting that horn. Let's go. We got a bloody NAS 100 in the bag that missed stop by a tick. Absolutely fantastic. I'd tell you, that's made my day. That's really made my day. What was that? I won to 2.65. Jeez, the thing looks like it's really going to go for it now as well, doesn't it? I don't know if we should be setting up for another short. Let's have a look. 1 minute time frame. I think I'd rather the retracement, to be honest. I mean, that's probably about there. Wait for the break of structure and then take a long. Back up to the entry. I don't know. There's a big old TRF in the middle of it. That's for sure. That doesn't really fill me with too much confidence. I don't want to get carried away, actually. I don't want to get carried away. Let's have a look. Right. So, decent trading margin. US 30 Dow Jones. We only can take this trade idea on the proviso that the bell rings. So, we can only take this at 2:30. Okay? This is market order territory. If in doubt, stay out, James. Yeah, I couldn't say it better myself, mate. I couldn't say it better myself. Also, I'm probably also in the frame of mind of incurring a bunch of losses this week and wanting to, well, not losses in terms of actually I'm in a loss because I'm not, but wanting to regain some of the lost potential of the week. Rightio. So, I am proposing. Or do we think that's too big? That's the thing as well, isn't it? That's actually quite a significant trading margin. So it might be more wise to take it to the high of this area. Yeah. So that's going to be the one. So looking at around a 1 to 2.5 return. But is the market going to stay underneath it until the breakout this afternoon? That's the question. I guess that's besides the point, really. That's the trade, so be it. So for the long breakout in the Dow Jones today, this is the trade setup. We have a TRF, as you will all be able to see nice and clearly. TRF is situated at this area in here, which is about 75% up in the trade. You'll have a really nice amount of profit in the bag before then, so you'll have ample time to get out should things take a turn. There's exit strategy for a trade like this. Again, very simple. Look at the previous level of liquidity, which is going to be the one situated in here. If the market comes up and rejects and then comes back down and breaks through this area, you're out. That's it. You're done. Okay? But that's the TRF to watch out for, not the one underneath. So that's your long trade idea. The short, yeah, the short's a bit hairy. The short is a bit hairy. I mean, we've got this big point of liquidity, don't we? The breaker structure for the short is going to be at this area in here. Right? So then, let's just drag this along. That's your breaker structure element. So then you're looking, I mean, yeah, and then you run straight into that, don't you? That's a bit annoying, isn't it? So would it be more advisable to have the breaker structure level there? This is a big drop. This is a very, very large no man's land. So the chances of this short getting pulled off today are not the greatest. So the target profit for this one, I'm going to have to make that zone a little bit wider. That's your TP. So we're essentially trading this trading margin that happened in here, the 1, 2, 3. So if we set this trade idea up, we're going to be looking down at that level in there. Stop loss at the 50% point again, looking at a 1 to 2.56-ish, something like that. So that's fine. That's your long, that's your short. Big no man's land. Is the no man's land tradable? I mean, potentially underneath this area in here. But the problem is we've got this big low. We have this big low from the catalyst, which is uncoincidentally bottomed out at the same area similarly. And so therefore it really breaks these two margins up into something that's not that attractive anymore. So from a risk profile perspective, it's just not for us. So we really want to be taking the long and the short here and here after the market opens up. So that's our Dow Jones setup. For the NAS 100, look at that long team. Look at the long. So the NAS 100 at the moment, we will be... What will we be doing? Let's go to the 15-minute time frame here. I mean, that's a beautiful level of liquidity, right? Really well articulated. Huge institutional selling pressure entering the market when we come up to this area. We've seen it, quite a few times. It is the one to be buying in. It is the one to be buying from. And then we've got this level up here, don't we? On the daily chart, we're there. So, it's a tricky one. So I think we use that. I think that's going to be the TRF, right? That's not the major inflection point because it's not the area in which price action begins to turn. Okay, that's this area up here. So if this is our trading margin, this is our breaker structure for the short that we took, I think that's going to be representative of the TRF if we decide to take a long. Now the breaker structure for the long is going to be at this area in here, and that's based on the information we have there and there. Okay, now this is getting a little bit convoluted. I don't want anyone to get lost. So if you do get lost or not quite clear, then just please ask away. That's fine. That's going to be our breaker structure. Now, the idea, or the ideal, more specifically, is going to be that the market stays underneath this area for a while. Then we see the breakout above, and we start to see that push up to the highs, in which case our long is going to be triggered at this area. Our target profit is at the highs, and our stop loss is going to be at the target profit of that previous trade for a 1 to 2.3. And that's what that trade idea is going to look like. If the market continues rallying up until the market open, I do not want to take a carbon copy of this trade here. This trade was purely for the CPI. Purely for the CPI. Okay, so I don't want to be taking a long anywhere. I don't want to be taking a short or anything from there. I will be interested in a short upon a rejection of this area up here. So then if we break structure, I can then take that short. Now the structural point, again, is not going to be here, but is actually going to be way up there. And that's going to be the structural point that I want to see broken for the short. So the market can then rally up, hit liquidity, break structure, we're in the trade, we come all the way down, we're out the trade. And that will be the total trade for the NAS 100. Now, because of the nature of this zone that we're at, the short is not actually that difficult to work out. And the problem with it is that we have, again, from a risk profiling perspective, we do have technical risks. So that there, for example, major inflection point. Look at the size of the moves that have happened at this level. Rally up, run down, rally up, run down. Big moves, not small. And so therefore, I don't really care too much about this area in here, because look at it back in time. It's an inflection point, but not the inflection point. And, up against the weight of what this one is, if we look at this back in time, look at that. Look at the moves that that's had. Look at this, right? Lots and lots of highs in the move. So we're going to have to be very, very careful of this. The target profit for this trade idea is going to be the less powerful zone back down here, with the intention or with the understanding that the price action is probably, if it does decide to go short, probably going to traverse its way all the way back down to around 1990. But that is our trading margin. So then we take the trade idea based on a breaker structure, which is going to put us in the market. Let's see. So we've got a collection of highs and lows, don't we, that run all throughout there. And then we've got the retests, and so on and so forth. So let's just get rid of this. I'm going to drag that up just a bit. And so then the short from this point is then going to be break a structure entry, target profit, and stop loss, which is going to be there. And that's actually yielding a 1 to 2.87 approximately. So a really, really nice return there as well for the NAS 100. So that's the trading parameters. So let's just have a touch at gold quickly. Yeah, that's fine. That's fine as well. Obviously, yeah, they're dead. GC stopped out. That's another loss. So Aussie yen, euro yen, pound against the CAD, and pound against the yen. Euro NZD's not there yet. We got a win in the USD CAD. We've got oil underway at the moment. We got the win in gold. We got the win in the NAS. And we are now looking at the next US breakout session. I think, looking at this, I think this is a pipe dream. I've got to be honest, guys. I really do think this is a pipe dream to see that kind of sell-off. I mean, we're only getting into the market sort of, you know, by the time the market gets down to this area, this is going to be at the end of the run. Not to say that it can't happen. I mean, it's happened loads of times, but it's just not, it's not perfect. It's definitely not perfect. So I would say if you do have the opportunity, stick to the NAS and use the US 30 as a backup, because by the time this is down here, honestly, you'll probably find the NAS 100's already hit its target. And by which case you won't really want to be in the US 30 Dow Jones anyway. You just want to be running away with the profit. All right, guys. So I'm going to wrap things up there. I'm not going to be providing any further multi-asset opportunities today regarding the FX space. Nothing on top of what we've already been doing. I think, you know, on reflection, the week's been pretty tough. It's been pretty hard going. A lot of market indecision. Yes, we've had a couple of good runs in the stock markets, definitely, and that's really what's carried us through this week. In terms of like the very, very little gains that we've had. But it's, in a nutshell, it has been very rough going. So I think it's probably best to just sit back, let the FX do whatever it wants to do with the current positions that we've got. We've obviously got UK Brent running now. We've got the US markets this afternoon. Hopefully we'll be able to get maybe another win or something out of that. And we'll call it a week, and we come back to fight next week. So does anyone have any questions? Any questions about the US market setups this afternoon? Need any more clarity around anything that's been said? What's going on? Yeah. All good. Okay, good stuff. All right, guys. Well, listen, I'm gonna be here, like I say. You know, gonna be trading it. Last trading session of the week for me, so definitely not gonna miss out. If you need me or anything, then please feel free to hit me up. I will be in the lounge chatting away and calling out things that have triggered and what's going on as best I can. So yeah, don't be a stranger. So guys, take care. Listen, I won't properly speak. I will potentially a little bit, you know, throughout the day tomorrow, see how you're getting on, but I won't, you know, properly speak until Monday. So I wish you guys all an amazing weekend as well. Have a really good couple of days off, and look forward to catching up then. So take care, guys. Good luck, trade safe, and I'll see you later on. Thanks a lot. Bye-bye.